Okay, welcome to the Swing Trading with Cycles channel. We're going to do an update on crude oil today. It is December 1st, first day of December. So we have a complete November candle, and it is the last month of 2022. We're going to start turning our attention to what does the 2023 outlook look like. But let's talk about crude oil because there's a really big development here. And we're going to try to cover a few things. The theme here is, are we in a new weekly cycle? Because as you've been seeing in the previous videos and in the Twitter post, and if you're not following on Twitter, definitely take a look at a link in the description. We expected that we were actually moving into, or that we are moving into a weekly cycle low, right? And that we topped out on week 6. And so the question is it possible that this low that we've just seen is actually the weekly cycle low? So we're going to talk about that. So that's the real kind of theme of this video. And so we'll first review the daily cycle. That's much more clear. It's now a question of ambiguity. Is this daily cycle actually also starting a new weekly cycle? We'll look at some alternate weekly cycle scenarios, which is just referred to. And then we'll look at what does that mean for the 3-year cycle? Because as we have been talking about, we're in 3-year cycle decline. Has that changed? Or do we have reason to believe that's changed? And then we'll look at the CRB index, the broader commodity index that looks at a basket of 19 commodities, which oil is a big part of, because energy is 40% of that basket, and oil makes up a big component of that relative to like natural gas, for instance. So let's jump into the chart. We'll start with the oil chart. We're looking at West Texas Intermediate, WTI. And so it seems pretty clear to me that we are on day 3 of a new daily cycle. We can throw on the 10-day moving average real quick. Boom. So we closed above it on Wednesday. Yes, that was yesterday, right? So we closed above it yesterday, and now we're getting follow through. Obviously, we could see a massive collapse in the candle today. Who knows? But this would appear to be day 3. And that's what I was saying. That's pretty unambiguous, right? So we thought we might have had a daily cycle low here on day 40. That was a swing low here, but then you can see it failed and then made a lower low here on day 45. And it took out an obvious pivot here that we had already identified before the fall, right? This is your next kind of obvious pivot that we were looking at for the 3-year cycle low, and we'll talk about that. But we hit that pivot and then we've reversed. So this doesn't necessarily mean things are bullish, because you expect at these obvious pivots, there are going to be a lot of buy orders there. It makes sense that price would move up. Closing above the 10-day moving average, again, that's another sign that your daily cycle low is in. And we kind of talked about this idea that, what would the daily cycles look like if they take us into the 3-year cycle low? So, this last daily cycle was 45 days. The one before that was 28. The one before that, you can call it 39. And so let's just say this next one is 35 days, right? Let's model that out, right? So, because it seems pretty clear that we're getting our daily cycle, or that we had our daily cycle low on day 45. So if we model that out, say we get a 35-day cycle, that gives us our daily cycle low around the middle of January, right? Let's draw a vertical line to make that clear. Okay. So now your question is this going to be a right translated daily cycle or a left translated daily cycle? And that's why the weekly is going to be really important to kind of understand that. So let's move over to the weekly chart. So as we've been saying on previous videos, this we were calling our weekly cycle low, week 24, after a 19-week cycle before, and then a 15-week cycle after that. Now, since that bounce, or since that big low we got on week 24, we've basically just been kind of consolidating inside the range of that candle. And in fact, to be clear, we're actually so we're not inside that range of the candle anymore. We're now back inside the range. So let's talk about exactly what's happening on this chart. So this is that's your 1 week, right? So that's our week 24 low. And then we had a big bullish weekly candle to a big swing low above that high. And then we just consolidated inside the range of this big candle, and we've been talking about that. Okay, yeah, so that detail is important, right? We've been oscillating really within the range of this candle. High of $93.25, a low of 79.67, right? So like basically between 93 and 80. We bounced like that for several weeks, and then we made a high of the range. This is a slight higher high than this one, right? So that was week 6, and you can think of it as like this is week 24. So this is 6 weeks after that week 24 low. So theoretically, that's week 30, right? So this would be week 25, 26, 27, 28, 29. Actually, wait, 25, 26, 27, 28, 29, 30, right? And so imagine a scenario where instead of this being week 6 of a new weekly cycle, this is all the same weekly cycle, and this is actually day 30, and this is 31, or excuse me, week 30, 31, 32, and then this is 33. So call this an alternate count, right? And we're going to see if it plays out. The reason we might suspect this is actually our alternate count, and I talked about this, that like the weekly cycles, the cycles in general for oil are pretty squirrely, and in general we're not overly reliant on, oh well, this thing has to have a cycle of X number of weeks or whatever. That's BS. There's no reason why this whole structure couldn't take 33 weeks to unfold. That's what we're really saying, right? This whole thing. And you could debate maybe this isn't your cycle or whatever. What you're seeing though, there's a precise reason for this. This is a bullish outside candle. And if you've been following along on this channel, I hope you can, because this is a bullish outside candle by a wide margin, right? Like we made a pretty big lower low, right, to print, right? And now we've made a pretty big higher high. I mean, I guess the high could be higher. It is Thursday, right? So like we still have another day to trade. So of course we can continue to make higher highs and maybe test this like 85-ish area. But because we're getting a bullish outside candle on the weekly level, what we would expect, you generally get follow through. So we would expect like another higher high next week, right? Like that might be your next weekly candle. And so it's possible that this is your cycle low. It's also possible like this is just a weird little 9-week cycle, right? Whatever. Like that had a top on week 6 and then bottom on week 9. You have to think about also just the fundamentals here, quote unquote. The market is reading this as more dovish, Powell's remarks, in that he's not looking to cause a severe recession, whereas I think many people were thinking they didn't care if they caused a severe recession. And obviously oil is a big input in just economic output, or excuse me, is a big component of just what we use for economic activity. And so if you have a big drop in economic activity, that portends a big drop in oil usage. And so it makes sense that this thing would be moving lower. But if those things aren't true anymore, there's no reason why we can't have a big bounce. And so possible that this is actually a new weekly cycle, that we're bottoming here instead of this being a cycle here. But again, you can interpret this as a short cycle that just bottomed as well. It doesn't really matter. As we think about the monthly picture, and notice this is all happening above the 200-week moving average. So that's the other thing, that's one thing that you might call to, is that we never touch that. But that's not like some kind of firm rule that you have to breach the 200-week moving average. This is potentially just a sign of bullishness that it wasn't able to get lower. But we're going to need a lot more evidence to suggest that we're not moving into the 3-year cycle low. And that is in the form of this monthly chart. So, and we talked about this in the previous videos, that because of the shape of this November candle, this big red doji candle, we're going to be an inside month. And that's what we are, right? And unfortunately, the high for October is $93.73. So as long as we stay up below that and above the low from October, November, which was 73.62, we're just an inside month. And so we could see a lot of back and forth kind of volatility within this range, the same way we saw that within that large weekly candle. So that's important to know about. So in some ways, this is a little bit annoying because it means we really kind of need to break above 93.73 to make this a swing low and leave that potentially behind us. That would make November a swing low and make potentially November our longer term cycle bottom, right? And that's why we're going to have to rely on the weekly signals until we see that. And so the 3-year cycle being low, being in or not, is inconclusive, because obviously the first step is we need a swing low for that. And so again, in order for this to become a swing low, we need to cross above it. We need to cross above the November highs, which, no coincidence, are actually right where the swing high from the March decline begins, right? Like this whole downtrend started because we declined below the high from March, or excuse me, the lows from March, which is the candle that marks the high. So that's right at around 93.56. So the other thing that we can look at, though, for a little clue on the 3-year cycle is the CRB index, the commodity index of which oil is a part. So the commodity index potentially has a weekly cycle low, or excuse me, a major long-term cycle low in September. We need to cross above 290 for that to be confirmed, in the same way that we have our, our specific level for oil. But we're going to be watching these very closely, because that's our other point. So I'll also point out, important to note, that this data is delayed for this index. So this is actually the November the last data point we have here is a November candle. So you have to imagine, and obviously it's the first day of December, what we would expect to see is something like this, right, for our December candle, right? For it to close above this line that we would need to see, and that would tell us that this is possibly our long-term cycle low in September. And again, we know oil made a lower low, right? And so it actually had its, while this was a long-term cycle low for the index as a whole, of which oil is a part, oil just continued to drop even lower. That's a possibility, right? It could tell you that oil is going to lead the rest of the index lower, also possible. You'll also note that that index is like an upper wick always means the next candle, or that it increases the probability that the next candle, or really any wick, upper or lower, that the next candle is going to be an inside candle, right? So in reality, the candle is going to open like here, right? It's going to open below the highs, but also above the lows. And so we're going to need to break above 287.55 to potentially test this upper bound. And we'll also need to get above like this little swing high here as well. That's at, what is that, 301. So we're going to need to, so that makes sense. So very possible that we have our long-term, but if that were the case, if this were our long-term sort of cycle low for the CRB, that would be one of the mildest we've ever had, right? In terms of just the decline and the length that it took. I mean, you can see these other ones, right? Like these other declines were just like many, many months and just massive downside, right? I mean, this was pretty short. I mean, that was into the COVID low. So you're saying, like, I mean, so this is going to be interesting, because the other possibility, of course, is something like this. Like, we always have to be open to multiple scenarios, and then we kind of weigh the odds. The other scenario is something like that. Like, even, like, oh, and then no, right? Like, you could see something like that, right? Like, as someone said, the market is designed to fool most of the people most of the time, kind of thing. So we'll be watching this very closely, because the good news is that we have very clear levels that we can refer to. But again, I think the most clear thing of all here is that we are in a new daily cycle. And so the way that we're going to have an inkling that things are bullish or bearish is the formation of this daily cycle, which is to say, is it going to have an early high and then start to roll over soon? Like, look at this thing. This thing topped out on day 5, and then look at the steepness of that decline. Every little rally was sold. Every little rally. Like, just, you got no more than like 5 or 6 days of rally at a time and then sold. I mean, this one managed to close above the 10-day moving average. You could even argue that this was a little cycle, right? And then boom, and then, like, that's semantics. And this was another rally, just another cycle. We just had a 9-day rally. So we're on day 3, and just like for context, you want to see something like 20 days, 25 days of rally, and we're only on day 3. So we're going to know pretty quickly if the cycle is bullish, the daily cycle. And if the daily cycle is bullish, then it means it's going to continue to push this weekly move up, and it means this is the start of a new cycle. Again, whether you want to think of it as this whole thing was 33 or this was a small 9-week cycle, the idea is that we're in an uptrend on the weekly chart. And then finally, we'll need to break above those levels on the monthly. So that is the lay of the land for crude oil. Very important picture here. And again, it's all about the macro, whether people think we're going into a severe recession or not. And clearly what the Fed said just allayed people's fears, at least a little bit, and at least for now. So we'll leave it at that. Thanks for watching.